How a mathematician become the greatest trader of all time. Welcome to my channel, and today's topic is very interesting. I want to start with a story that completely changed the way I think about trading. Picture this, a guy who doesn't know anything about Wall Street, doesn't have a fancy suit, no trading degrees, everything, but somehow ends up becoming the most successful investor and traders in the history. How? Not by being in the right place on the right time, no by gambling, no by any lucks, but by mathematics, guys. Mathematics, yeah, you heard me right here, mathematics. These guys figure out how to beat the Wall Street with numbers, no gas, just pure logic. This guy is called Jim Simons, and his story is mind-blowing, guys. Now, before we dive into his story, think about it. When most people think of trading, they think of guts instinct, or maybe some experience of the trading, or maybe watching news and reacting to market moves. But Jim Simons, he react completely different. He wasn't like most of the people. He wasn't guessing, he wasn't gambling. He was looking for patterns. He was looking for hidden opportunities in the chaos of the markets. And here is the kickers. His fund, Renaissance Technology, has an average returns of 66% annually for decades. Yeah, you heard me that right, 66% for a year, and not for few months. It's 18 years, 66%, you know. For decades, most hedge fund managers are happy with 10 to 20%. Even in our fixed deposit, we have 4% or 6%, then we know it is very crazy and we are very happy about it. But Simons, he was making 66% every single year. So let's rewind a little. Before Jim Simons was this Wall Street legend, he was just a kid who loved puzzle. He was into maths, he loved maths, and just by average high school math, he was in a deep math. He studied MIT and got a PhD by 23 years old, and even cracked military codes during the Cold War. I mean, this guy was another level. He was a legit genius. But what is interesting is, despite all this success in academic, he wasn't driven by money. He didn't want to be a stockbroker, he wanted to be a problem solver. And that mindset led him to be a question. What if I could find patterns in the financial stock market? He was obsessed with the idea that everything, even chaotic markets, had patterns underlying. And I guess you could say this is where he started to begin with his quant trading journey life. Here is where it gets even more interesting. Simon didn't just run out and start a hedge fund. Nope. He spent years studying patterns. He was a professor at the Stony Brook University, teaching maths, doing research, and deep dive into geometry, algorithmic, and basically learning how to read the underlying structures of everything around him. And then one day, he made a decision that shocked everyone. He left the academia and his university, and he started hedge fund. It's called a Renaissance Technology. People thought he was crazy, a mad guy starting a hedge fund. Who could take him seriously, guys? So we back to the 1890s. Wall Street was all about gut feeling, experience, big personality, and reading the news. Traders didn't even have algorithms or high-speed data. They had their instinct. But Simons was different. He didn't trust his gut. He didn't want to follow the crowd. Instead, he built a team of scientists, physicists, and cryptographers, no traders, guys. And they didn't rely on any news or hunches. They just run the math and the numbers. And that is where Simon has the edge. He treated trading like a scientific experiment. There was no guess, only data and models. And then Simons and his team started to build a lot of algorithms. And these models aren't just analyzing the market. They were looking for micro patterns, tiny shifts in the data that human cannot see. But the secret wasn't just in the model itself. It was the data. The more data they collected, the better their algorithms became. This is something that I think a lot of traders overlook. Data is your edge. Simon didn't guess what is the market going to do next. He calculated it. So every single stocks market movement, he can actually quantify it, calculate it, and then make a trading decision based on it. And guess what? It worked. In fact, it worked very well that the Renaissance Technologies, the Mendelian Fund, made those crazy returns of 60% over the year. But here's the mind-blowing part. Until today, there is no one exactly know how Simons and his team did it. Their strategy is more secretive than Coca-Cola's formula. But one thing is very clear. It just wasn't luck. It wasn't timing. It was maths and the logic behind it. Simon didn't get lucky. He didn't rely on some of the insider news or break it few lucky trades. He used data, logic, and modeling, and most importantly, he used systems a trading system that has actually made him one of the most successful investors ever. Possibly, Simon's is a big trading breakthrough. Maybe it is your idea. Let's keep learning together. If this story inspires you, hit the subscribe and like button and turn on the bell for more insight and on how you can use data and logic to make your trade smarter. So I will see you in the next video.